first of all, thank you for making the time, Luis. It's great to have you on the podcast. We used to talk every day for a little while, pretty much every single day for like a certain amount of time.
For a big chunk of time. I miss our calls.
I know.
We had many excitement and tension.
Many conversations. And look, we'll get into a little bit of that. And I want to explore some of the stuff. And your more recent, activity in your career is around M&A, but you've been doing investing for some time and even kind of coming from corporate development. And so we'll cover the full spectrum of your experience and your expertise. And I guess to set the stage, maybe you can share with the audience, and there's some stuff that I probably don't know, which I enjoy because we know each other pretty well. But as we were digging in and doing a little more research about your journey, there's some things that, I didn't know, which is fun for me to always learn new things on this podcast too and hear from you. So maybe start off with just an overview of how'd you get into VC in Latin America? Set the stage for us.
Great. I've been around, which is what you're saying. And it speaks to age, not necessarily experience, but it's been a fun ride. So I started my career as a young investment banker straight out of college. And the first thing the folks I was working with noticed is that I spoke Spanish. And so the gringos instantly put me in a project in Brazil. And so that was my first journey into Brazil. And I think that's the first part of the equation. I grew to love the country and love the region. From Brazil, I jumped to Chile and then to Mexico and did projects all over the region. I left investment banking and got my MBA. After the MBA, this was 2000. So right at the height of the dot-com bubble, I had actually tried to start a startup. It was a B2B marketplace in Latin America. I did that between my first and second year of graduate school. I was at the Sloan School at MIT, but I flew that summer to the West Coast, found a co-founder, and we started this business, got angel investing. I went back to Boston, continued working on it. And at some point midway, I said, this entrepreneurial thing is not for me. This is too hard. And so I decided to get my degree and I dropped that. But, at that point, those of us who were looking to get out of, regular finance were looking at the internet as such a huge opportunity. And I guess my temperament was such that I looked at sort of where can I get the best visual of what was going on in this new world of technology. And so I spoke to consulting firms. I, did the tech consulting firms. And then I came across media companies. And I thought it was really interesting what was happening inside the world of media. And there was one company in particular, Bertelsmann, German-based business, who at that time was trying to position itself as the leader in the digitalization of entertainment and media. And they had this really interesting program. And I joined it right after my MBA, spent some time in Germany, then went to New York, which was my base. And it was a sort of a corporate development role where we looked at new digital businesses, invest in them, and kind of brought them in and exploited the synergies that we had internally. And it was funny because we did some pretty radical things. Bertelsmann invested at that time in Napster, the file sharing audio services. We invested in a bunch of other digital media companies. And, through all that, probably made a lot of mistakes, but learned a ton. And that was the second part of it. So I had the Latin American part from early on in my investment banking career, and then kind of the tech media side from my years at Bertelsmann. And funny enough, one of the most exciting things I did at Bertelsmann was, we owned one of the big record labels. It was BMG at the time, which was RCA Records, Arista. Great perks as well. I got to see Alicia Keys in a showcase before she was a big star. But anyway, one of the fun projects there was kind of negotiating the first set of record rights with Apple and helping them launch the iTunes store. So all these things were happening right around that time, and kind of they opened my eyes to the world of technology.
That's a really pivotal time, right? In terms of the evolution of media and how things have really shaped and changed, being, one of the most kind of like monumental companies that really just shifted the landscape of, how, music. So it's cool that you're in the middle of that. And I love how the fact that you're like, oh, this guy speaks Spanish, this guy from Puerto Rico, let's send him down to Brazil. That's like,
exactly.
that's how kind of thing happens sometimes in like these corporate,
Only a gringo.
Yeah, like he probably can figure it out. He can figure Brazil out. But
I
it sounded like
don't even think they were thinking about that. They seriously had no clue about the difference. But anyway,
that's the reality. But you were the benefactor of that, because look where you are now. You're in Brazil in this gorgeous environment, and you're having fun along the way. So that's really fascinating. That so that deal with Apple, that was a pretty landmark deal then. iTunes,
Yeah. It was what. It's funny because if you look at, this is sort of the arc of industries. If you look at where the record business was at that point in time, it was declining precipitously. It declined a ton more after that, and it was because of the structure of what Apple put together, and then the change in rights management into more streaming format. That you got Spotify, etc. And if you look at the setup, the great beneficiary have been the record companies, and they've sort of turned around their business substantially. So even traditional businesses can reinvent themselves and find new life in these periods of technology disruption.
Yeah, I think there's always like that fear of like an industry and how it's kind of, heading off, off a cliff, or, I remember I had a friend and he owned like a record store, and like the cassette tapes and the CDs, and he sold it right at the right time, kind of before that business took off or fell off a cliff. But it's interesting to kind of anticipate these industries and how they're able to reinvent themselves. And we'll get into a little bit about, since Globo is such a powerhouse in Brazil and Latin America, and there's a handful of these other media companies. Bertelsmann is one, Naspers is another, Axel Springer, these media companies that have had to kind of evolve their businesses over time. And, they're well positioned to take advantage of this internet boom that we've seen over the last, couple decades. And we'll talk about that in a second. Before we dive into that, let's fast forward maybe to 2006. And you're now working in private equity, right? So you've kind of always flirted with this venture capital tech. You're there, but now you're deploying capital. You're investing in some of these like more growth style companies. Larger deals. Maybe share a little bit more about kind of what that was like. And that was also in Latin America in 2006, which is quite early, right? Was it tech focused, or was tech just one of the areas that you invested in? Tell us a little bit more about that.
So I joined a firm called Palladium Equity Partners, which was a middle market American fund. Had a previous relationship with the principals there, and media was an important part of their business. But another thing is, one of their core anchor investors was one of the two big Spanish banks, BBVA, and they wanted to include in their mandate a view, a kind of cross-border U.S. to Latin America, and then Latin America view of the world. And as you said, at that point, private equity, while in the region, was still kind of relatively nascent. And I think we saw an opportunity, and we kind of divided the world among myself and another colleague. One took Mexico and kind of the northern part of Latin America. I took Brazil, Argentina, and Chile. And we went out and tried to do deals there. Ended up investing in two companies in the region, one in tech, but IT services. This is not really sort of high tech, but it was a different point in time in the cycle. And the other one in healthcare. And what was interesting about that, what you noticed and what became really instructional for me is that, we were doing U.S. deals, we were doing Latin American deals, and they were very different. In the U.S., playing the private equity game wasn't the growth story. It was about, playing the credit markets, being very judicious about, how you go into a company, and, hitting on a few, but very few operational leverages um, in order to increase profitability and then be able to sell off the company later on. Latin America was a completely different story. I mean, leverage played absolutely no part. Um, and if it did, it was incredibly expensive and it competed with the equity for return. So you really had to find opportunities where you can sort of make a difference. And that came to two things, very sort of nascent markets that were growing, and where there was a lot of space for either consolidation or just sheer um, sheer riding up of the growth curve. And we saw that in IT services and to a certain degree in healthcare as well. And the other thing is sort of find the opportunities where there's a lot of low hanging fruit to create value. And so that sort of and now as I look at it, at Global Ventures, where we are looking at these opportunities that they have a lot of those components, the components of both growing markets, large opportunities, and also the ability to hit operational leverage points, I think are essential to being successful in these markets. And it makes venture in Latin America, particularly as you get sort of beyond the early stages, the early stage venture phase, sort of particularly interesting, and particularly interesting for players that have local know-how and can hit those sort of value level points.
Yeah, it's a little more exciting than just like a leveraged buyout kind of like, private equity play, like where you, like this is more, it requires more creativity, not just financial engineering, but like actually identifying, where the markets are, growing, and, maybe some consolidation opportunities. And so I think it's probably a more fun place to play.
It is, and on the flip side of that, you also have more volatility, and as we've been through this together in our own sort of shared journeys. Exchange rate can move all of a sudden, very suddenly, and create a big hurdle. You have movements, you have different types of fiscal considerations, and that that are important, and can sometimes drive the whole of a return of an investment. And so,
yes, we remember that. I remember that all too well. Just for a little bit more context for anyone listening, when we merged with Zap, which is owned by Globo, we did an equity swap and put the two companies together. And you were the opposing banker, and so I got to negotiate against you. And then I was like, all right, like I'm glad that we got to know each other. Now let's team up. And when we sold the business, we worked together on that. And yeah, I guess like that was around the time when the currency was sliding quite a bit, and we were seeing this on a daily basis. And I was trying not to pull out my calculator and literally forecast exactly how much money I was losing as the dollar strengthened and the real eroded, as in kind of real time for us over a few months. And we're sitting here negotiating this deal, but it can go either way too. I mean, I remember in 2014 when I closed the round and kept the money in dollars, and so it just depends on kind of where you are and which side of the deals that you're on, and I think that there's stronger kind of ascents and then stronger declines sometimes. So if you're playing over a long period of time, you can be on either side of it, and there's definitely money to be made, right?
For sure. Although, look, as a venture investor, I really have no idea how to play exchange rate, and to me,
I don't think anyone does.
It's just a question of getting into the right situations, making sure you have a good portfolio of companies with tailwind and capitalized in a prudent way, and hopefully sort of the returns come that way. I think timing the market in that sense is
that's a
key.
good thing for us to explore a little bit. I want to talk a little bit about that and kind of M&A in general. But before we dive into that, I was thinking and kind of reflecting on kind of our deal a little bit more. And how long have you been in the M&A game? Like when you were at Allen and Company, which for the listeners, top tier on the smaller side of M&A, but very, very reputable. How many years journey was that?
So I was in private equity up until sort of about 2012, and then I joined Allen and Company and been there almost for 10 years until my new role at Globo Ventures. And that was an incredibly formative period for me. It's just Allen was a special place, is a special place, and I still have dear friends and colleagues there. I think this is special for various ways. And it has a lot of similarities to my current life right now at Globo and Global Ventures. First of all, it's a family controlled merchant bank. It's not even fair to sort of call it investment bank. It really operates much in the model of like the old banks of the 1920s, where there was real partnership and a real sort of use of the internal capital, both intellectual and monetary capital of partnership to create opportunities for its clients and its relationships and that the fact that if you put that with kind of that long-term partnership model, you get very strategic long-term thinking dominating and that sort of becomes almost sort of your operating ethos. And I think that taught me a lot about how to approach both investing and how to approach relationships and business relationships in general. So at Allen, we occupied a special place in technology, both technology investing, because the partnership and the Allen family sort of made investments on the early side of a lot of well-known startups. We helped companies grow by raising capital, and then we were very active throughout their strategic development. My mandate there was to sort of expand that vision to Latin America. It was a time where Mercado Libre had gone public, and there was sort of the first generation of sort of great entrepreneurs emerging in the region, and you had among them Brian Requarth, who had sort of the pioneering real estate company in the region, and you had David Vélez starting Nubank at that's more or less the same time, and Sergio Furio, Creditas, and a bunch of other companies, and it was our mandate to sort of follow that generation, invest either behind them or support them, because we were convinced that there was going to be a thriving ecosystem, and sort of taking that Allen and Company view of a lot of these founders and a lot of these companies are going to be the great leaders and the great pools of capital of the future. And so that was a lot of my journey there. At the same time, the great thing is that we were doing that pretty successfully in the US and in other places across the globe. And so we had very good access to what the investors in these types of companies were thinking about, how the market was viewing them, and which types of business and business models were really generating value.
How do you balance the investing, helping raise capital, and then helping sell companies? Because I think about this at Latitude, and the reason why I ask is kind of selfish because, as you know, we have a fund. We also build software for companies, and like these are different functions inside the same ecosystem, and it's the same customer base. So like it facilitates multiple layers of being able to provide value. But sometimes I wonder, in all honesty, like, oh, am I creating a conflict for myself when I have these multiple angles to approach? So how did you guys think about that at Allen and Company? I don't really think of you guys much in the investing side in Latin America. I don't know if you did do that. Like I top of mind is obviously number one, M&A. Two, I know you did capital raising also. I remember, you helping some founders with that. Did you guys make any investments in the region as well?
No, not actively. And Alan has probably made just a few investments in Latin America. But I think what's important and the way sort of institutionalized is that partnership mentality. You want to really create partnership and alignment long term with the founders and with the companies. And so that I think is the way, first of all, our core business was the banking business, and the capital we generated, we then sort of that capital also invested, but that was secondary. I think the most important part was those relationships and having those relationships succeed, because that's the way we would succeed. And so I think that was what provided the North Star. And also, you bring around a pool of great people together, usually opportunities emerge. And so that's a combination of great founders with great companies, but also great investors. And there was a very strong focus on the investor side. I think the last side of it is sort of great corporate relationships. A lot of those people who we backed early on became leaders in and of themselves. Sort of they became the incumbents, and those deep relationships continued, and so that facilitated certainly the flow of opportunities.
If I could ask a couple more questions on the M&A side. I mean, I learned a lot about this process, and you've been in a handful of deals. If you could kind of synthesize down into like the key components to just doing a good deal. And I remember like a lot of anxiety on both sides. Like me and you, we talked often, in like lots of ups and downs in the process and timing and all these things. But what would you say are just the key components to extracting the most value as a founder when you're selling your business? Because there's people listening today that may be exiting their business at some point. What advice do you have, for them when they think about when it does come time for some type of exit?
Yeah, look. First of all, I think Brian, you were a natural. I think the a lot of the what to do as a founder. I think you can speak to yourself in the way you conducted both transactions that we worked on. I think being able to communicate a clear vision for a buyer, if you're a seller, is essential. So the same skills that a successful founder has for fundraising is a skill that needs to be put in a more strategic context when you're trying to sell a company. It's different in the sense that you have to take into consideration what is the value upside for the combined entity, for sort of and impart that vision, and have not only the leaders of that company or that buyer to buy into that vision, but even the second level down and the core people be excited about it, and I think you did that extremely well. You always want to start with a position of strength. So creating an M&A opportunity because you need to have an exit, or because you suddenly ran out of money, and that's a situation that you need to manage is obviously a less a less attractive position than when you are, at the top of your game. You have optionality, and you can generate value in lots of ways. And so, easier said than done. But if you can find yourself in that position, I think you're going to be sort of much better in terms of outcome. And I would say the last thing is you should always prepare for these things. It's never too early, I think, in a company's journey to run scenarios in your head about what you're building and where that fits strategically in the environment that you're playing in. And I think in that sense, having good partners, whether it's a co-founder or a CFO or someone who can be very good about laying sort of that strategic chessboard and can work sort of few steps ahead and think through these iterations of where we are now, where we're going, and how does this fit in the overall chessboard. Just doing that exercise often and having that point of view is always helpful, because it means you'll be prepared when the time comes. And preparation, I think, is a very important part to a successful exit.
Do you think founders should be talking to potential acquirers early and like building a relationship, becoming kind of frenemies? Is that a good thing, or should you just have your head down and execute? And when I looked at this and I thought about Brazil in the landscape of real estate, there's this phrase that I probably said 5 or 6 times on this podcast, which is, I always knew that if you're not at the table, you're probably on the menu. And when I looked at the landscape of Brazil, and we had Imovoweb, which we knew very well. I got to know them. When I first started the company, I was the small company. I was underfunded, and I was like, at some point, I got to make sure that I'm at the table, because I'm going to get swallowed up. Just because it was very difficult to compete. For those that don't know, I remember competing with Zap, and I was crapping my pants a couple times, because I remember when we used to look at the numbers from the SAA, because we could pull the numbers. And I don't know if Globo was just doing some kind of financial stuff, but they like transferred like hundreds of millions of dollars to Zap at one point, and I could pull up their numbers. And I remember like all of a sudden it was like, oh, Globo adds $300 million to the balance sheet of Zap, and I'm like, that's unfair, like it's a powerful. I don't even know if it was intentional, but so I guess I'd like your thoughts on, is that something all founders should do? Is it a smart thing to do? Is it a distraction for the business? How would you advise founders?
No, look, I think I go to sort of the previous question, and I think the most important thing out of those factors that I mentioned is sort of be in a position of strength. And to be in a position of strength, you have to be performing well. And I think if you're executing well, I think the priority should be execution. And, always be paranoid about both competition, about what could emerge, not only the competition that's obvious that's in sight right now, but the one that's out of sight as well. I think that's part of what a talented founder should have in its many options. And play the hand of interacting with both competitors or with potential partners in a smart way. There is value to creating a sense of you are part of that table, but I wouldn't prioritize that over execution. I think that wins hands down in an M&A contest.
Yeah, execution wins overall. If you can't execute, and I remember when we did our deal.
Look, one thing, Brian, is I think that the other point I made was just be able to impart a vision, and I think you did that very successfully. In part, why these two companies that had very different approaches, and by the way, very complementary approaches. You were killing it in SEO. You were building kind of leads like crazy, and Zappy was monetizing at a different level, high tickets, very high value customers. And, you were able to sort of, fit one strategy into the overall picture and create a very compelling, vision of why this worked.
My understanding is the business is performing super well, which makes me feel good, right? You should feel good as a founder. You don't want to sell something and then have it be the buyer feel like they.
Look, I think at the end it's because I think it started with the merger of Zap and VRL. You took the probably the two necessary approaches to dominate the market. That sort of heavy sort of SEO, take a lot of leads into the business, and then Zap is sort of monetization agent. And then put them together, and I'm not surprised. It's to hear that it's not working well.
It's a strong asset. In the early days, Mickey Malka, who we both know, he told me like back in the day, he was like, "You should buy Zap," and it was like we were 1/10 the size of Zap. And at this time, you weren't in the picture, but I had approached Zap, and I think I probably got laughed out of the room at that point. And it was kind of funny because it just showed the ambition. Like I thought it was a really crazy idea. But I think that, I remember the time when we actually did have a more serious conversation, and I talked to Eduardo and we met up at a conference and we entertained the idea more. And then we agreed to have a phone call where we would swap the numbers. It was like, okay, last quarter, what was the revenue? What was the traffic? What was the key metrics? And we just laid it all out for each other, which I think was a very cool way to because we didn't even know how we were performing. And so it was an opportunity. I will say, I think Zap was a little surprised that we were doing a little better than maybe was evidenced, or at least the perspective. But I think one thing that made our deal work is that we were pretty open about all that stuff. And it wasn't like a super easy deal to get done, but I think we had strong motivation and we saw the bigger picture. And I think it would have been harder to monetize the assets if we didn't kind of unify them, because we were kind of beating up on each other. And so the industrial logic made a lot of sense. And I guess that's your point where we could communicate that vision about why it made sense to put the two businesses together.
Exactly. I think one of the things that we still sort of underappreciate in Latin America, this is a very sort of young ecosystem. And one of the things that we underappreciate is the power of building a great company that becomes a great asset within a larger company. And so, M&A is a perfectly fine journey for an ambitious entrepreneur, and it can generate significant value. And it should. If we're only fixated on IPO exits, I think we're going to disappoint ourselves. One, because our capital markets are much shallower. They're getting better, and they're going to get better. And I have full confidence that there's going to be increasing liquidity, but there's still going to be probably not sufficient to, I think, manage the amount of innovation that will come through over the next decade or so. And so I think that M&A would be a huge tool for value creation. And I think founders shouldn't be disappointed by this. I think they should be actually quite excited. I mean, some of the best deals of these last vintages have been M&As. If you look at Technesis and
where do you think the M&As will primarily come from? Do you think this is going to be global companies buying in Latin America? Is it going to be Latin American companies that are incumbents that are buying? Are we going to see China come back into Latin America more aggressively like it did with 99? Give me your take on the kind of the global landscape of where this M&A activity you think will come from primarily.
So hopefully you'll get a combination of all of the above. I think you increasingly saw in this last cycle involvement from large Latin American companies, whether it's TOTUS buying RD, Itaú made a few interesting acquisitions as well. And I think those things we're going to add another layer to it now, which is some successful tech companies that scale up and become kind of incumbents in their own right, being engines for M&A. And so I think that that you know complements very well, and that makes the system that much more robust. As for um, non Latin American companies, is either U.S. or maybe Asian companies, depends on the segment, and a lot of these interesting deals were deals of kind of arbitraging talent and development talent in Latin America, and fit that into a sort of bigger global platform. I think that's interesting. I think disappointingly, some of the more established U.S. tech companies have grown mostly organically in the region, and not through M&A. But I would hope that there's scope. I think that was a time where there weren't as many options. There weren't as many entrepreneurs doing very specific things, very valuable things in the region. And so I expect that to change as well. And the last thing is, it's going to be an interesting sort of, if I look at Brazil in particular, maybe a little bit different. Mexico would be a bit different. I think Mexico is more tied to the hip to the U.S., but the decoupling. If you think that the world is going to be a world of China versus U.S. and you have countries like Brazil that kind of have a neutral stand, they're going to have to learn how to play and benefit from both sides. Have strong links with both the U.S. tech ecosystem and the Brazilian and the Chinese tech ecosystem.
Let's talk a little bit about Globo Ventures, and probably Globo got to cut its teeth on its deal with me. And Roberto and I talk pretty regularly, and we've ended up building a good relationship over the years. And you joined the board after a year of operations, that when we merged the companies, and Roberto joined the board, and that was a really important kind of pivotal moment for the combined company, because we got much more activity with Global than we did before that, which you guys were kind of dipping your toes into this space a little bit more. Now you're fully in. The toes are wet, but you've submerged yourself a lot more, and you've since then joined full time. It's 2 years now that you've been at Globo. Talk a little bit more about what the objectives are of Globo, and maybe share what the potential misconceptions are of Globo, as it set the record straight about what you plan on doing and what you hope to achieve as you invest more in venture.
Yeah, so I think, just to sort of clarify, Globo Ventures is an investment firm that was set up by Roberto in conjunction with his family, who are the shareholders of Globo. And our purpose is to invest proprietary capital belonging to the group. And we have two main strategies. We have a fund-of-fund strategy, where we invest behind themes that we think are that are going to drive value long term, with some of the sort of best in class operators, and then the managers. And then we have a second, which is a direct investment strategy, in which we have a similar approach. We invest behind businesses that have strong tailwinds, and where we can create differentiation outside of our capital, and we can add value, beyond the capital that we invest, by bringing the resources and the know-how of our group, and that's important. That makes us sort of a very Brazil-focused investor on the direct side. We don't necessarily invest in Brazilian-only companies, but we invest in companies where Brazil is an important part of their strategy, and where we can be that helpful, value-added partner. The second thing is, and you talk about misconceptions, it's we're not a corporate venture capital firm. We're structured, as a separate investment firm. We have a GP-LP relationship. We're the GP. The LPs are the shareholders. And what we do seek to bring is sort of the assets of Globo, to help our invested companies scale up faster, to de-risk, um, and to generate new opportunities in markets that we think we know well. And it maybe worthwhile spending a few seconds on the platform. Globo is a company that reaches more than 100 million Brazilians on a daily basis, both through its offline and online platforms. If you take that number on a monthly basis, it goes up to about 170 and 180 million. I joke that every conscious Brazilian just is touched by Globo. And I think it's true. And, we're also a large creator of digital assets. We created the leading Portuguese language and market leading OTT platform in Brazil out of scratch. That takes a lot of know-how, internal know-how that has been developed over the years and over the decades. From the beginning, when Globo launched its first online sites, we've created daily fantasy gaming platforms. We create vertical media spaces in different across different interest areas, and so we can take a lot of those learnings and a lot of those assets, whether it's the know-how of the consumer, whether it's sort of the digital skills that you need to be successful in bringing consumers to an entertainment platform or a transactional platform, and we can put them at service of very talented founders and talented companies that are scaling in different sectors, and that's sort of the core of our investment thesis. That's where we like to play, and I think to Globo's credit, it's not only a way for us to leverage what we have, but it's also a way to create diversification and to be present as a group beyond media in new areas.
Around check size, stage, talk a little bit more about, where do you like to play? What's the ideal kind of equity position and check size?
Yeah, so there's a fair amount of flexibility in that. I think if you take kind of where we like to, what the investment thesis is, it turns out that we want companies that already have a product, that they have a defined user, a defined person, or a defined target market, a fair amount of traction. And that's where I think we can be helpful in scaling. I think and whether that is going from 1 to 10 or from 10 to 100 or from 100 to 1,000, we have different components to help along that journey. And we can be present in all that journey. And so, we're less caught up as to what stage. We invested as early as Series A, and we've invested in publicly traded companies as well. Because we found, opportunities to collaborate with companies that we think have significant upsides, even though they've already, IPO'd. And so, yeah. And in terms of check size, in sort of these venture rounds, we invest up to $10 million. But that goes from $1 to $2 million checks to up to $10 million checks.
I was chatting with Roberto about this because I shared with him the other day that I've talked to a handful of founders, and they sometimes instantly associate Globo with media for equity because you do have this big media asset. Roberto was quick to correct me and let me know the amount of capital that you guys have put in is, outweighs the actual dollars invested, outweighs the media piece. But he did say that there's been a handful of media deals that you've done where founders have come, looking for you. Talk a little bit more about your view of media for equity, because I think it's met with mixed feelings from some people, right? I mean, if you're a consumer and you've got a consumer product and you want to get in the hands, like obviously it's the best platform in Brazil because it has the largest reach. Talk with me a little bit about how that is discussed inside the fund and alongside the group, and how you guys actually execute on that.
Yeah, no, that's a great question. I think we've learned a lot. I think prior to the formation of Global Ventures, Global Ventures was officially launched in 2000. But prior to that, you know, we had been investing, and I'd say we because I was involved as an advisor. I was actually an independent member of the investment committee that did the first internal deals at Globo. And this is, credit again to Roberto and sort of having Roberto and all of the shareholders, frankly, to sort of have the vision of saying, look, there is an opportunity to not only seek diversification, but also um, create value by leveraging our assets. And, that's not media necessarily. That's all of the other things that we talked about. And so we began thinking about this, and Roberto began thinking about this in earnest, I think back in 2015 and so. And, we did the first few deals around 2017, 18. And we had taken inspiration a couple of models. There's a company in Germany called ProSiebenSat.1 that built very robust digital businesses on the back of their media. So it was sort of the original media for equity transactions. They built a very large travel business. They built a very large marketplace business and a few others, digital content business. And then Times Group in India did something dissimilar, but also in the media for equity vein. I think they in there they sort of bet on both foreign companies coming to India and they providing sort of almost a go-to-market platform for them in exchange for equity, and then sort of local startups. And so we tried some things out and we learned a lot. And I think one of the things that we learned is, media can't be fungible with money. I think, and that's sort of a great realization. I think when a startup is focused on sort of maximizing and allocating its capital on a day-to-day basis because of sort of milestones that you have in that venture journey, I think that may not be the optimal time. And in fact, that may not be the time where you should be thinking about leveraging an asset, particularly an asset like Globo that has such a big reach. Although I have to say, we have also very narrow reach across sort of different verticals. So depending on the type of company you could execute. The best transactions and best partnerships have always been those where kind of there is an understanding. There's sort of almost people come in looking for the product. People come in looking for the partnership. And internally we almost don't like to call it media for equity because it's almost like it's a value add that we bring that goes beyond kind of a media inventory, having a media inventory available. It's a lot of the planning there. It's a lot of the positioning. And so we found that companies that are, later stage that have, scaled up organically quite well, that have kind of reached sort of diminishing returns in things like paid advertising that, have competitors in the real economy and need to sort of play sort of a broader game and diversify their customer base. Those are companies that where we can partner kind of with that media view in a much more effective way. And what Roberto said is right. I mean, our deployment of cash versus media for equity deals is orders of magnitude larger. I'd say like 5-1 or something like that.
Well, I was on the other end of the competing with the media piece, and I remember I used to get in a cab and I would ask every taxi driver if he knew Viva Real and if he knew Zap, and I would do this in every single taxi ride. And I used to get so pissed because a lot of the taxis knew Zap because the brand was more well known because of all the TV and a small anecdote I'll share. I remember being in like a little cafe one time, and I remember looking up at the TV. And there was like some show on Globo, and like they were introducing Zappia movies inside like the telenovela, or like, and it was like inserted into the program as like organic, And I was like, man, that was a rough moment where I'm like, how am I going to compete with that? But we did what we could, and we did master the SEO game, as you said before, and I think that There's benefits to that, but clearly when you have a brand, then you start commanding pricing power, and that's put the two assets together. There was the brand and the
Exactly.
pricing power, and then we had a lot of value of for a very kind of more competitive price, and you put those together, then you obviously unlock a ton of value for in this case for OLX. And ironically, OLX had been paying you guys a ton of money also for advertising on Globo too. So you guys should get to double dip, it sounds like. Collect the money on the advertising, build the assets. So it's
Remember
good
what I
to
said.
be.
We're a separate investment company.
It's fair enough.
Measure purely on the returns we bring our shareholders.
Fair enough. And it's a single LP, right? It's the shareholders of Globo, which gives you a lot of flexibility, and you get to kind of be the deciders of how you run things. And
I have to mention, I have to do a plug in here, Brian, because one of the things we were sort of thinking about, I mean, we're a work in progress. I mean, we established in 2000. I came in 2001. We built sort of a stellar team, but we're sort of a lot of that sort of early period has been building processes, honing our thesis, understanding the space that we're occupy. One of the things we did, the big debates is we wanted to get to know companies early, and we were always tempted to participate in early stage rounds, with seed rounds as well. And so we decided last year to approach that in a different way, and so we seeded and partnered with two talented entrepreneurs and investors to launch an early stage seed fund, which is Supera Capital, and so that
Mauricio,
just wanted to make that plug.
Yeah,
Mauricio Feldman and Luis Maron. Yeah,
early Latitude supporter and friend. It's great. It's great to see more early stage things that we can potentially support and co-invest with and do deals together. And so I'm very bullish on the long-term partnership that we have as well, and grateful for the continued support that that Globo is showing Latitude, and so I think it's it's still very early in the ecosystem, as you pointed out. There's so much space to grow. Maybe if you could kind of end and wrap up with, let's fast forward. What do you hope to achieve in the next kind of call it decade? Globo's been around for 100 years, so thinking in decades is not an unreasonable amount of time when you go back 100 years. But it'd be great to hear, what does the venture arm of Globo look like in the next call it 5 to 10 years? What do you hope to accomplish, and paint that picture for us?
I think you set it up nicely. I think Globo has been a company that has reinvented itself and grown over 100 years now in a business that just lives constant disruptions. I mean, radio disrupted newspapers, and then TV, radio, and then cable TV, and now internet, everything. But I hope that we have the same long-term view, and we are building an investment firm for the next few decades. I think that is the objective. I think we'll building a Brazilian investment firm within this very rich ecosystem that we have, and that to me is a several decade, be bold enough to say 100-year effort. And I was just going to say, look, I think you said sort of about our friendship and our partnership, but it's pretty amazing what you're doing with Latitud, and it's sort of a sign of how both rich and deep the ecosystem can be, but also how you need the structures and the people to sort of to light the fuse. And so we're great fans, and I'm not just saying it because you paid me to say it. No, jokes aside, I'm saying it because I do feel that is, I think what you're doing is very important.
Thank you. No, we're trying to, grow the ecosystem together, and rising tide lifts all boats. And so we're definitely connected there. And I've really enjoyed the chat today. So thanks for making the time.
Thanks for having me.